moving just in the collaborative direction overall, right? So I really like to just have this where every month we have a new topic that we can all kind of mastermind and learn around and just continue to kind of grow together on it. Really my goal at the end of the day is just to see everyone do better. And if there's a way I can help be a part of that in any way, shape, or form, I'm always happy to do so. You can certainly connect with us as always through our meetup link at gridknoxville.com. That's going to have all of our regular info as well, along with replays. That's going to be on our YouTube channel. So if there's ever an opportunity you might have missed a meeting, there's always going to be that info can always go back to like via YouTube to watch later on. For here, I guess we'll kind of go around the room a little bit here, and I'll just kind of work from my left to right if that's cool. People can kind of take the opportunity. Just introduce yourself, kind of what you're looking to get out of this meetup. If maybe you happen to have a deal by chance, now would be a great time to maybe mention that, because there might be someone in here that might be able to help, or vice versa. If you're looking for something, again, this is always that kind of good opportunity to do so. So with that, I will kind of pass around the room.
My name is Zach Schroeder. I'm a real estate agent with Keller Williams. I'm out of the Bearden office. I am not quite financially ready to invest yet, but I do work a lot with investors. So this one is actually kind of perfect because I'm just talking about different ways to fund their investments with some of my clients.
Wow, very cool, man. Thanks, welcome for joining.
I'm Karen Calloway, same story. I'm also a KW agent out of the Bearden office. And so I'm here to educate myself so that I am better prepared for my clients. We do have some investor clients with my team, but really I would like to become an investor. So I'm getting the knowledge from you.
Love it. Very cool.
I'm Natalie Gutierrez. I'm also with Keller Williams, and I was just looking to get a little bit of more insight for myself as well.
Very cool. Good stuff. You're crushing it out there in your neck of the woods. That's fantastic.
Hey, I'm Jason McDaniel.
What's up?
I'm an investor, and I just mostly interested in helping people these days get started and find deals and stuff. And also I'm looking for deals on mostly looking for larger apartment complexes, storage units, and trailer parks currently. And I'll take any deal
Sure.
that you give me. Single family.
As long as the dollars make sense,
Yeah.
right?
Yeah. If the numbers work out, take whatever you throw at me.
Very cool.
But yeah.
Cool, and welcome. Thanks, Jason, for coming on.
Yeah.
Good to see you, Justin.
My name is Justin Myers. I am a community manager for us. You'll see me sending you emails on Meetup and running the Facebook group and sometimes jumping on stage with Cory. I'm the director of sales for our team, and I'm a commercial and residential realtor. And I'm a residential realtor in Tampa, Florida as well. I'm licensed down there. So what I'm looking for is I'm doing two things right now. Partner and I are starting to build out some spec homes. So I'm gonna look for some funding on, I think we're gonna be able to scale that up. The first one should be done here in a week. And then I'm looking for my clients for any shopping center anywhere in Sevier County. If you get Kodak, Pigeon Forge, Sevierville, any sort of freestanding shopping center, we've got commercial buyers for that. Parking garage, I got the management or the parking garages, if someone wants to buy all of them downtown, so we have a connection, let me know. And a finder's fee. And then we're also looking for a cabin, 1.5 million, is generating about a 10% gross return.
So, very cool. Like it. Good stuff.
Steve Levine, I'm a private lender. I own LTR funding. So what I look to get out of this, first of all, I don't know. I'd like to learn. You know, it's always interesting to learn different areas of the business. What I found talking to different people every day, I learned so much because it's a business really full of smart people. And so, you know, this is just another thing that I tend to try to learn more.
It's awesome. Good stuff. Thanks for
Hi everybody, I'm Rebecca Contreras, and my license hangs with Keller Williams right here in the Central office. I am commercial and residential, and so I absolutely love commercial. Century being, I love industrial, so one of the things that I have done is I slowly built my residential database. I've been here for 17 years, and I've got lots of networking that I pull from. As far as commercial, a little bit different beast, if you will. As far as what I have, I've got two duplexes on one parcel with an additional 6 line sewer hookups ready to go. Buyer just bailed. It was a 1031 exchange and they found something better, so whatever. That's on Woods Creek. I have commercial clients who are looking for gas stations, banks, shopping centers, hotels. I also have some campgrounds, and I have a few more route cabins coming along the way. And I love to be educated, and I'm always looking to be a sponge and soak up anything. And so if I can just admit, you know, whatever room I'm in, I probably know the least. So share with me. I'd love to hear anything that you've learned, that we can all learn from each other's experience. So see everybody.
Very cool. Thanks for coming. That's really cool. Because you have campground?
I do. They're coming.
Oh, on that here, or later on.
I posted that on Facebook. Blew out of the
Right.
water. Oh my gosh, yeah, I had like 37, 39 messages. Where is it at? How much? We're ready to invest in it.
Yeah.
Holy cow.
There's one that I had my eye on a few years ago, but still for me, it's like the one that got away. It was
Oh no, really?
perfect. I mean, true. Yeah, I could wax poetically about that all day. So just important, some legal stuff real quick, legal disclaimers. This is purely just a meetup. We are not licensed lenders, attorneys, things like that, right? If you have more of those type of questions, definitely seek that advice. I mean, I'm only going to speak on areas that I'm really, truly an expert in. So I'd say if you really have other questions regarding those areas, by all means, go ahead and just seek professional counsel where necessary, right? With that said, so you found a deal. You've got a good idea as to what it's going to cost to buy this thing, to fix it up, what your ARV, your after repair value is on that property. Might not have the money, might have the money. What do I do? Move it into that. I mean, sources to fund that deal. There's certainly the almighty dollar. Cash rules everything around me. Might not be the best vehicle, might be the best vehicle, depending, I guess, on the deal, but whether or not you're really wanting to just maybe leverage all of your money into that project, does it really make sense to do that? No, it's kind of up to you in that situation to decide whether or not cash is really the best vehicle. Certainly it's the fastest and quickest way to really get anything done at the end of the day. Home equity, taking equity out of a property that you might own, opening up a line of credit to borrow against that asset to then go ahead and fund other ones. Stocks, whether or not that is or isn't doing well for you right now, it might not make sense to go ahead and pull money out of one good thing to throw at another good thing. If something's kind of doing well for you, I'd probably say leave it alone unless it really ultimately makes sense to pull money out of there. Other investments, I guess, would be 401ks, IRAs, specifically like a self-directed IRA, which would allow you the opportunities to kind of invest in real estate through that way. That is a whole nother topic for a whole nother day of how those kind of work into the ins and outs of that. That can be used when needed and called upon to go ahead and invest into your properties with.
That is a topic we're gonna cover.
It is a topic we're going to cover. That is a topic for later.
Wow.
Absolutely. That is a whole big deep dive in and of itself. Friends, families, partners. I would say that's how a fair amount of people kind of tend to get into it. That's kind of one of my favorite ways. I mean, quick story, one of the last flips I did last year was in that. And that might be something where you have the deal, whether or not you have the money to maybe put into it to go split with somebody, or you just have a money partner in it that you are willing to go and partner in on this and turn around and split profits. Those margins might make sense for you. They might not always be the best way to go about it, because certainly if you can just go to a lender, a hard money lender, things like that, your margins still might be better than just splitting it with somebody. It just really depends as to your comfortability level and what kind of makes sense for you at the end of the day. For me, one of my flips I did last year, I actually kind of wrote down my numbers on it just to kind of like review overall. It was a condo I did with a buddy of mine. in Fountain City, which is near north of Knoxville. That was a purchase where I brought the deal and I brought money to fix it up. He brought the money to buy the property, and then we split it on the backside. We split that profit like 60-40. Because he brought a large chunk of the cash to fix that deal. I brought, the deal, some money to fix it up, as well as some, what I would call like go for labor, go for this, go for that kind of thing, right? I'm fairly handy, but he's a contractor, does it day in, day out. So the split made sense because he had some expertise as well as a larger skin in the game. We did that at a $70,000 purchase, $9K reno budget. We factored another $3,000 for closing costs. That brought us up to $82,000 for total purchase. When it came to when we then closed out that deal, there was an additional $2,992, which brought our total investment into that at $84,292. We sold that property for $114,600, which left us with a profit of $30,308 when we finished that deal. We split that 60-40, which returned all of our money, and I made just a fuzz over 12 grand. So it's 130% cash on cash return. Not too shabby. I was more than happy to do that deal all day long. We still kind of partner on a few things like that, running that same kind of margin, because again, like he does that for a living. He's bringing usually a large amount of the cash to it. And so I don't mind putting in some sweat equity into it as well as usually bringing the money to fix up the property. So that can be a way, right? That's a kind of an example of how that partnership might work. The more people you bring into it, and I guess just structuring on that deal could always change the complexity, because even though they might go into it as a silent partner, might not always mean that they stay a silent partner into there. So it just kind of depends, again, especially if they're a friend or family member. Just good old traditional loans, and we'll kind of go into that here now. They certainly can cost more than cash because you're looking at an interest return on that as well. But it is usually the best combination where you're going to get your money, your leverage, speed, cost, and convenience of it all. Some possible loan sources. There's just going to be a traditional bank or local credit union. Possible, you're going to likely need some kind of track record of success, especially if they're funding part of that rehab. If it's a just regular conventional purchase, I know some lenders that'll do it for usually 20-25% of the purchase price. Banks are usually going to then require an appraisal, underwriting 3+ weeks to close that deal. And depending on your deal, that might not make sense, right? So you're talking to a seller and, hey, we can close quick, cash, 10 days, 2 weeks, something like that. A bank or a conventional lender probably gonna throw a monkey wrench into that. So there's certainly some deals that just aren't also gonna qualify. I mean, there are some properties for conventional loan that a property just might not qualify for, just depending on the condition of it all. So that's a good question.
So on that one, so
Yeah.
it says 3 weeks to close, which I think is accurate.
Yeah.
And sometimes,
Sometimes.
what are you seeing with appraisals right now?
Right now, there's
Minimum, like realistic contract time.
realistically 2 to 3 weeks. I mean, turn time.
Yeah.
And it kind of varies, right? I mean, I tell clients going into a deal as just trying to set those expectations. Hey, when we get to an appraisal, understand this might take 2 weeks, maybe 3 weeks to actually turn around from the time it's ordered until the time it's received. That might be a 3-week window. So just having the expectation up front that yes, the appraisal's been ordered, but don't call your lender bothering them every day, wondering where this appraisal is, because we've already had that conversation on the front end. So just trying to set that. There are some weird occasions though, where I've seen them come back in 24, 48 hours. I had one week ago for a client. We did an appraisal before going to market, came back inside. It was like the same day, which I've never, ever seen before. That truly blew my mind that the appraisal was done that morning and they had it back that evening.
But was it a private appraisal?
Correct, it
So it
was.
wasn't going
Yeah,
This
so it
goes
wasn't going
faster.
through a bank or
Yeah,
anything like
this
that.
goes
Exactly.
much faster.
It was just like, boom, done.
Yeah.
I would say though, like on my purchase for my most kind of recent home, that came back in 48 hours. And that was just a regular old conventional loan. So, I mean, usually what we're seeing is 3 weeks on average. However, there is the odd anomaly that can come up. So I mean, definitely a great point to bring up into there. Certainly when it comes to some rehab deals, most banks or traditional lenders are going to want to see some kind of consistent track record into that. That might lead you down towards opening up, a commercial or a business line of credit if you already have a company that you can operate that out of. I know a guy in Philly who basically funds all of his flips on business lines of credit, or he'll buy the property cash, run it through a line of credit, fix it up, turn it over into a Section 8 or low-income housing renter, where it's going to be consistent cash every month, and then does a cash out refi, pulls all of his money back out, usually plus a little bit extra, and then he kind of runs that play over and over again. It's pretty wild, pretty impressive to pull that out. There is the old private, or otherwise known as a hard money loan. Hard money is kind of an older banking term in general, where you're lending against like hard assets. So in this, we just kind of refer to it as a private money loan. These are going to be like private individuals or larger companies that are lending out money to usually purchase, fix, and flip. And they're going to have some of their own structures and margins inside of that deal. They're usually a little bit more expensive than traditional banks, but oftentimes a lot faster. That's how you can kind of leverage that. And even though you might pay a higher interest rate, sometimes points or things like that, or have to come in with some skin in the game, 25%, things like that, you can usually get access to that cash and often have to, I'd say, close within a week to 10 days on average. Seems to be about that timeline on it all. These loans are solely backed based on the quality of a deal. So I would say if you're looking at a deal and you're looking at using like a hard money lender, lean on that lender, because whether or not they're going to lend it to you is probably going to be a good indicator as to whether or not you've actually got a good deal on your hands. So I would say like lean on that person that you're going to for your hard money to actually kind of help you analyze the deal if you're kind of newer into it and kind of figuring out, do I actually have a deal? Because if they're not going to lend it to you based on those numbers, probably not. So it would be a pretty good indicator overall. Sometimes on those, your credit's not as important, I would say. I mean, so that can work for some folks that might have a lower credit score. And I'm being not a hard money lender, I know we've got money here, so they can kind of attest to what those credit scores kind of need to be. Usually it's a little bit more flexible than a traditional bank on it all. So it just, even if you got some cash, you can usually get funding. No money whatsoever in this thing, I would probably say just go ahead and wholesale that deal or sell it if you're an agent, however you want to work that out. But I would say just wholesale it, get your cash up to where then you can actually come into and have some skin in the game. Because I would say most hard money lenders are going to require some skin in the game. If they don't, I would be very surprised, and there's probably some weird dealings going on that might not be too aware of. So just making sure that you've actually got some money to come into it when you're going to do it. Some typical hard money loans, right? Commercial uses, non-owner occupied, usually for real estate, held for investments or for fix and flips. I don't know. They're going to want to have a first trustee, which is that first position in terms of the bank. So foreclosure is going to work very similarly as to a bank. For this slide, it was kind of a maximum 65 to 70% loan to value ratio. And I guess for construction, there's going to be a holdback, or that money's going to come out in draws. So I don't think you're just going to get this big lump sum of cash right off the bat. It is usually based on some kind of draw system to structure out. I'd like to take a second. I mean, can I lean on Steve for a second? Kind of, if you want to expand on a little bit more as to how you like to structure, if those numbers seem about accurate.
Pretty accurate. And on the draw, what's good to know too, I mean, there are two ways that lenders do it. The right way to do it, I mean, there's something called Dutch interest. If you've ever heard that term.
No.
Nobody should really charge that, but on a drawdown, you should only be paying interest on the money as you're drawing.
Sure.
There's something called Dutch interest, where there are lenders that will charge you on the entire amount, even though it hasn't been dispersed yet. So I would add to that. You've hit it pretty much on the money. I look for 20% down. I'll go sometimes up the ARV depending on the property.
Sure.
65% ARV. But I mean, you have it down. Yeah.
Well, that's
I always look for something to say, but you didn't leave me one.
Sure.
I'd be curious to hear where, I just saw you walk in and Jason's here
Yeah,
too.
yeah,
Where
yeah.
do you guys?
Where do you guys like to go?
Yeah, what are your
What's your favorite
sources?
way?
I'm sure it's changed now because you both are a little more established, but.
So I have multiple sources. I use private money, individuals with a little bit of cash. They typically, it's a little easier with those guys. They fund 100% of the purchase, 100% of the rehab, and get paid out at either refinancing or sale of the property. I use hard money occasionally, residential capital partners, Longhorn Investments. I've used those guys. I know Steve's new in town, so he's bringing another option. And I've used local banks, MCB and First Century banks. So, you know, it varies depending on the deal and how fast I need to have it closed.
Sure.
And now I've actually been able to do a line of credit on the property I have. So I also have cash if I need to make a quick purchase. Sure. With the line of credit. So.
That's good stuff. Jason, how do you?
Yeah, I've done a mix of, I've done a bunch of stuff, but I'm pretty much, I've never worked with a bank before or a hard money lender. I've done mostly partnerships. I've had one primary partner for about 4 years now, and we've bought tons of stuff. And also we've done a ton of flips and rentals, and just split everything 50-50, and I've never brought a dollar.
Yeah.
And then I've got a personal portfolio just that's 100% seller finance notes, where I just found people that were willing to take usually between $3,000 and $10,000 down. So very little money to get into it. And then most of my notes have been 15 to 25 years. I've got 4 or 5 that are on a 30-year.
Yeah.
Term with
That's
no
awesome.
balloon. I've got one note that had, or 2 notes that have a balloon, a 2-year and a 5-year, but all the rest with the seller finance.
Yeah.
And so just now, I mean, I wasn't able to be financed until just now. So I'm just now about to hopefully do a refinance with a bunch of my seller finance properties, just because over the years I've rehabbed almost all of them and built up equity. And because all my seller finance terms have been amazing. It's usually 5% fixed,
Right.
20 years, $5,000 down. That's a typical deal. Usually needs like 15 or 20,000 to be a great rental.
Right.
But I've just not ever refinanced. So I'm about to refinance out, and with the same bank have a line of credit, and it's really just accelerating my potential. But also I still work with my 50-50 partner, and we're doing some big stuff too right now.
That's actually huge, because that's one of those things I didn't even necessarily have it like in these notes, but just one thing is just seller financing, right? And the ability to go ahead to someone that owns the property where they can act as the bank, and you're essentially just kind of re-borrowing that money back, usually with some money down, right? Like you have to say it with usually a higher interest rate than most banks are going to be lending at. But for those sellers, it might make sense because they might not need all of that money, or for some tax purposes, they might just be looking to have that money more on a slower drip, as opposed to one big chunk where they are probably going to be subject to some kind of capital gains tax. So that's actually a really good kind of note, something we'll just kind of re-add into there.
Yeah, would it be helpful for anyone to hear how that conversation goes? That hasn't had that conversation? Because Jason explained to me, I've been using it, and it makes a lot of sense once you know how to work it. Sure.
Yeah, sure.
I'm down to
Sure. So I'll try to make it brief. Just cut me off if I get tangential.
You're
I can tend to do that. So or if I start bragging, I can tend to do that. But no. First step typically is, do you have a mortgage? If so, how much is it, right? Because if they owe $50,000 on a $100,000 house, I'm usually not. I mean, if I have a flip paycheck coming up, I already have it planned to put into a rental or a down payment for another rental or rehab. So I usually don't, I've never been cash rich, just, had a bunch of houses. So I'm never like, if they're like, well, I need 50,000 down, I'm like, okay, well, I'll just buy it cash with my partner, so if they own it free and clear, or if they owe 5, 10, 15,000 down, then you say, okay, well, have you considered carrying a note, or do you urgently need all the cash at once? Because if you don't have an urgent need for all the cash, you can do either way. I'll be happy to buy it cash, or I'll be happy to do it on a note. Maybe if, my cash offer is going to be about 65,000, well, I'll give you 70,000. So if we're negotiating, even they'll say, well, I really need 70 for it. Well, I'll give you 70 if you'll take 5,000 down in payments over 15 years at 5% fixed, which means you're not going to get that huge capital gains hit all at once right now. A lot of times they've depreciated it down. They've owned it for 20, 30 years. So all the depreciation, or most of it, is out. So they're about to get hit hard for some capital gains. So they still have to pay capital gains throughout the note, but it's just spread out through the payments. So the yearly, say I pay them $3,000 a year in payments, it's easy to write off that much taxes. You can find stuff. But if you're writing off, $60,000 in taxes all at once, it's difficult. Plus, I do the, before I discuss with them, I usually do the math. I get the amortization calculator and run through. So if they carry a note for $70,000 over 15 years at 5%, what is going to be the total paid? So I say, okay, well, if I buy it for 70,000, in reality, I'm giving you 5,000 down plus 70,000 plus 5%. So I'm really going to end up giving you like 120,000, whatever it is, rather than 65,000, my cash offer. And then you get hit with the capital gains, and plus you get the consistent income instead of just It's a lot of people like that, because most of the sellers I come across are winding down. I buy a lot of portfolios where I buy 4, 5, 6 properties at once from one person, and they're in their 60s, 70s. They've done it for a long time, and they're just kind of sick of being a landlord. They've got a crappy property and crappy tenants. They're a crappy landlord, but it's in a good location.
Right.
That's my target audience right there.
Yep.
That's what I look for. So.
And they like that monthly cash.
Yeah.
payments too.
Yeah, they
just
love
don't
it.
have to
Like,
deal with
yeah.
that.
No insurance, no taxes, no tenants, but you still get the monthly. So unless you have an urgent need for the cash, I believe in the product I'm selling people, so it's easy for me to pitch them, you know what I mean? So unless you have an urgent need for cash, why wouldn't you sell it to me, seller finance? It's kind of silly for you not to,
Here's the best part. You do the risk reversal, which is, and hey, let's say I don't make the payments, I'm gonna come in here and fix this place up. You're gonna get a new kitchen. You keep the property, you get all the money I put into it.
Yeah, I left that part out. That's also a big part of my spiel, is saying, if you're worried at all, I understand you don't know me from Adam or whatever. I've got a bunch of referrals. All the people I've had notes with years, they'll get on the phone with you, and I've asked them this, so I've got a list of referrals with seller finance. So, but if they don't want to do that or whatever, if you're a little hesitant, first of all, at closing, I'm putting my money where my mouth is. I'm going to give you $5,000 cash up front, which that's a lot of money for me. Giving you $5,000 day one, and then within 30, 60 days, I'm going to go in, I'm going to put 20, 25,000, whatever it is, sometimes 35, 40,000 I'll put into these things right away. And in 2 months, it's going to be like HGTV style. That's how my rentals, that's how I like them to be, like super, basically like a fix and flip.
Yep.
And because of that, I've got so much money in it, I screen very strictly on the tenants. So if you're worried you might have to foreclose on me, you don't want to get stuck back with the property. Well, if I get hit by a bus in 6 months or 6 years, you're going to get back the property, but it's going to be like ready to list with an agent. You keep my down payment, you keep all the payments I made till then, and you get a totally renovated house. So there's pretty little risk.
Yeah.
So do you typically structure it with a balloon payment or
No.
a horn? Or
If
is it
they
straight
ask
15
for
or
one,
20?
Yep, straight 15, 20, 25. If they say, I'd really like to just be done with this and 3 or 4 years, I say, well, how about 5? But like I said, I've got a ton of these things. A ton. I've got about 40 doors right now, all seller finance. and 2 of them have a balloon payment. One's a 5-year and one's a 2-year. And the 5-year is actually my only deal. I did one before, but I flipped it. I talked the guy into doing 0%. So it's 0% interest at 15 years with a 5-year balloon. So I was like, yeah.
I love it. I love it. That's fantastic.
Well, he was stuck on 170.
Yeah.
You know, I mean, I talked to this guy for 1.5 years.
Yeah.
At first, I was like, 170 doesn't work, man. He called me a year later. Hey, let's meet over there and talk some more. I was like, I'll give you 160 cash. I need 170. It's like, I can't. And then my buddy was like, dude, just tell him you'll just give him 170 in payments over 15 years.
Yeah.
And I told him, I said, would you do no interest? Yeah, if you give me 170
Wow, sure.
and a 5-year balloon, 5-year balloon.
Yeah.
That's
No problem, right?
So, I mean,
Gotcha. No problem.
and that was in Maryville, and that was like 3 years ago. So it's
Sure.
worth 270 now. I
Right.
spent like 10 on the rehab. That's one of my small
Wow.
least. Yeah, that's been a killer one for
Yeah,
me. So
that's a killer deal for
Natalie,
sure.
where do you find your money? I know
Yeah.
you do investments and you work with a lot of investors.
I've teamed up with another realtor in the
Yeah.
past, and now I'm
Okay.
doing it with my contractor
Cool.
because I'm the one that brings in the money and he brings all
Yeah.
the labor and the material, so it's
Okay.
easy enough for me.
Yeah,
Yeah.
cool. So you're bringing the money just for what the acquisition and the fix up and everything like that.
Right.
And then they're just coming in with basically the labor, and then it's just a split.
Correct.
after the fact.
Can't get any easier.
No.
and you've done a couple of seller finance
And I've
flips, right?
yeah, best way, because if you can only put like he was saying, 5,000 down, then we have cushion with whatever I have saved
Yeah.
up to put it towards
Put
the
it into
house.
the room.
You did a
Which is the
seller
best.
finance interest-free flip, didn't you, until like you took occupancy, right? For like 6 months of interest-free, I remember you
There's
were telling me
interest
this
only.
deal at Red
Oh, it
Dot.
was interest only. It was the house on Broadway I have.
So the
I
interest
still
only
have.
got you, okay,
Yeah,
that's
it
what it was.
It was 100%, but it was, so the people that pretty much handed it over to me, they know me, it's a couple of investors. I signed off, no money down, and the renters were already paying like $850. And they only wanted $650 from me up to 6 months whenever I could refi. So I was getting
Yeah.
money, like free money just to play with every month. I bumped it up to 1,100 a month
Sure.
because it's a big old house. And so, that's how I did it. So just refied out of it.
Yeah,
And
that's cool. So now it's just,
just a free house
Yeah.
pretty much.
yeah, that's fantastic.
So
I have one more question before we get off this topic.
Sure.
Since we're gonna get stuff.
I know.
When you're finding partners in that, is that people that you're finding through people you already know? Are you using your network to do that? Like when y'all have worked, or just?
yeah, just people I trust.
Yeah,
Like
it's the
it's
same
been
for
a
you when
super
you-
small sphere that I could really
Lean
confidently
on for
trust,
it.
yeah.
Yeah.
And I've been blessed with them. I
Yeah.
don't need anything else, so.
Has that been
super
your
happy.
experience when you're, is network? Because I feel like that's an advantage here.
It
Is
is,
it such a small, people know each other? Like,
right. You build that
if
confidence.
somebody vouches for you, then you can get some stuff done.
These meetings are huge. You may
Right.
think you're not getting anything from it. I went to one in Knoxville probably 2 years. And after going there for quite some time, a guy who you would never think has a lot of money approached me. And now he's one of my private money guys.
Mhm.
And he's just constantly calling, hey, you got something else? So, I mean, you learn to trust the people that you connect with in
Yeah.
these meetups and see what they're doing, you know, kind of hear other people vouching for them. So it leads to good things.
Yeah, no doubt. I mean, relationships are everything,
Yeah.
at the end of the day, right? Yes.
I actually have a lending question.
Sure.
Yeah.
So asset class wise, I know all of you guys are talking about, single family houses, multifamily. You had mentioned, I'm sorry, I'm terrible with names, but you mentioned RV parks.
Okay.
Yeah, sorry. Hi. So I just funded an RV park. It's probably my favorite deal I've done in Davis.
Yeah.
I did one right next to Bristol Raceway.
Oh,
And-
wow.
And I'm
Yeah.
gonna be honest, I was so disappointed that I was the funder and not the partner, and I tried every angle to angle my way in on this deal. So, long story short, it's adjacent to the racetrack, and they're already slated next year, they're opening up a Hard Rock 11 minutes away. So this guy's gonna kill it, and I learned so much about RV parks. And like so much, you don't have to rent the spots, you can sell the spots, and I mean, there's a big market for it. Anyway, long story short, my question was this. So I was able to charge a much larger, I shouldn't say much larger, but a higher interest rate than I normally do on that project. And the reason is, and this is why I want to know if anybody here can correct me. You can't get bank money for an RV park unless you go SBA, from what I understand. I don't think you could just walk into a bank and say, hey, I want to buy a 70 pad RV park. I can't find any bank that's doing that type of loan because I'm finding those deals coming my way constantly. And I like doing them, but I like doing good ones. You know, I obviously, like you guys look for your deals your way. I look to fund what I look to fund. But I think that's something to keep in mind, that certain types of projects, certain asset classes, you are not going to find bank money for at all. You know, maybe if you have certain types of relationships, I'm not going to get on my soapbox and say you can't get it, but generally speaking, you're not going to get it.
Right.
Because the gentleman I lent the money to for this is already working on his SBA loan, and he asked me for 3 years on the deal because he had a feeling it would take him that long to potentially refi if he chooses to do that.
So they don't look at it just like a regular commercial?
For whatever reason. And listen, I could be off, but he was a very knowledgeable guy and he was not unhappy paying a high interest rate, and it was a great deal. It's not like I left myself in a bad leverage position. I probably lent 55% of ARV, you know. Yeah, it was great. It was great. He came to the table with plenty of money and nobody was sad in that deal other than me that I'm not going to be a partner on.
Yeah.
But so that was just my point. I didn't know if anybody here had any different experience because I'm finding that to be the case. Because I lend my money and I also lend for a fund out in California, and they disappointingly won't touch it either. Like I'm in that war with them now to try to get them out of their own box also. You know, they have $150 million to move, and I turn around and I tell them, why can't we do fun stuff? You know,
Right.
why does it have to be the same vanilla crap that everybody does?
Right.
I'll do it with my money, but for some reason, the larger institutions just won't touch anything that's interested.
Was, because you're in a marina as well, right?
Yeah,
Like
I
another
did
deal.
the marina here. Yeah, Melton Hill.
Okay. Was that person that same kind of position, I guess, in that?
So he needed to do an addition. So he had bank money that I don't want to get into his entire.
Sure,
business,
yeah.
but he had bank money that was borrowed many years ago by his parents at ridiculous rates, like as bad as my rates. So for him, he didn't want to deal with the banks anymore. The banks had tortured him. They really treated him very poorly over the years. He needed to add another 35 slips. So I took out all the 2 first positions, the 2 other banks, and gave him what he needed. But again, you know, very sweet deal because I would have lent him whatever he wanted. The marina's worth, you know, 4 times what I lent him.
Sure.
So again, you know, but he obviously couldn't just walk into a bank and get what he needed. I didn't want to be bothered with it. He had enough.
Sure. That's cool. That was good stuff. That was really nice.
Yeah.
That was really cool. I appreciate all that. So, I mean, I guess this kind of finishing up that hard money piece a little bit, right? Credit of the borrower might not be as important on that deal. Points and some interests are going to be kind of prepaid at closing as part of that structure. Usually a higher interest rate, 9-13%, 2 to 5 points. It's pretty common depending on that loan to value. And then cost of loan is directly related to the risk taken by the lenders. I mean, again, I would say like at times, if you're working with like a hard money lender, run the deal by them. Obviously, they're going to want to kind of look at it in general, not just hand money blindly. But if they're not willing to lend on it, it's probably not the sexiest deal that you might think of at the end of the day. So, you know, in all that said, really, we just kind of have to look at just what our cash return is overall. So you might not need the partner, family, friend, spouse, person you just met, you know, on the street kind of thing. So just kind of understanding really those numbers and if it really makes sense overall. I mean, there's a lot of different options to use, you know, with proper funding, right? Your cash return should be pretty significant overall on these deals. So I guess I'll just kind of open up the floor a little bit just to see if there was any kind of questions. I know we just did like a pretty good little deep dive a few minutes ago, but just if there was something piqued anybody's interest, we would like circle into that kind of thing.
I got a question on that last thing. 'Cause
Yeah.
You went over it like you're gonna get a higher return on your cash.
Yep.
And I was thinking this when you were saying like you got 40 properties, right? And you've put 5, let's say you put 10, you know, whatever. You have 40 properties and you're in max. If you put 10 on all of those, $400,000. versus I'm gonna go pay cash, right, for one
For
flip.
one flip, right?
Yeah, just buy the whole deal cash, like the return on it, you get a lot more bang for your buck. Do you like leverage too? Do you always use leverage?
Yeah.
That's the key to scaling.
It kind of like you know, I didn't have very much money to start out, so my first 2 rental properties were on finance. So that kind of leveraged me to be able to get through.
So leverage is everything. Cash is not always king. I mean, leverage is really at the end of the day how people, you know, in a word, just scale to heights of wealth. Really, I mean, it's just not all debt is bad. It's just how you leverage it at the end of the day, right?
I've got some friends that have been pretty much, most of my closest friends are way more conservative than me with investing and always have been. And in the last year or two, especially, they're kind of coming over to my side. They're like, yeah, just refinance. I mean, I've got some buddies that had just tons of properties free and clear, tons and tons.
Right.
And I've preached this seller finance thing so hard, and they see what it's done for me. And now especially some people have fears of inflation and stuff. So
Right.
they're starting to refinance everything and, you know, get into, of course, long-term debt.
Yep.
If and when possible, which, but now more than ever, I feel like leverage is long-term debt. It's
Yeah.
just so valuable. That's where,
Yeah.
You're getting into commercial 30-year loan programs for 4%, 5%.
yeah. And yeah, that's another reason that's getting everybody jumping in. It's just so low and it's not gonna stay like that forever. And if you can get it for 30 years, I mean, it's free.
Yeah.
It's after 10 or 20 years, you're gonna look back and be like, that was free money. That was better than free money.
Where do you see interest rates going, Sam? I just had a call with a mortgage broker friend of mine down in Tampa, who was talking about whatever Bandeck Mortgage International call about what the forecast was. And they're like, we see 7% appreciation, like 5% appreciation minimum next year, 3% in 2 years. Like the market's not gonna, you know, they think that this stock is very strong.
I think we have,
Rates are gonna go.
I think we have a unique market here.
Yeah.
And the demand here is crazy. You know, you have Amazon building, I believe, 2 different facilities within, 15, 20 miles of each other. There's talk of a baseball field. So I think here, property is really interesting. Interest rate wise, for 12 years, they have the Fed has falsely held down interest rates. At some point, when that pops, that's going to spring. The effect it's going to have on real estate price, I don't know. It'll take the stock market straight down, in my opinion. I mean, that's my original background. I would think that would be the death of that, because the reason the stock market runs is a totally different topic. If you want me to stop, I'll stop.
No, please don't.
Yeah.
I love
Let's
it.
continue.
So, big money, forgetting real estate. Big money goes into real estate, but big equity style money historically goes into bond purchase. Sure. You have to be an idiot to buy bonds paying, you're going on 30 years at 1.9% or 2% or whatever they're paying right now. So that money is either in real estate or taking more risk than it would like to be taking in the stock market, or it's probably in the market. The second there is real meat on the bone in bonds, that risk asset comes right out of the stock market, runs right to bonds where it belongs, and the stock market goes where it belongs, which is way lower than it is. But again, it's my opinion. It's not. You would ask for that.
Yeah, no. I mean, what's the stat? Is it 40% of all the money ever created has been created
Happened
in the last
6 months, right?
Yeah, that's an insane.
That's
insane.
Yes. it's-
But yet they keep pushing down interest rates further, which is an obvious manipulation.
Yeah.
So when that manipulation's over, it's gonna be really bad, really fast. But what I would say is the rental market should take off through the roof. Because rentals here, I mean, we just moved from Florida about, 10, 11 months ago. Rental market here is incorrect. Because for the appreciation you've had on property, for like $1 million house in Florida, we were having this conversation. You could rent for $7-8 grand a month. $1 million house here, like it just caps. You can't rent anything for more than $3,500 a month. Like,
That's why
it makes no
doesn't make
sense.
Yeah.
But that will eventually make sense. That has to happen
It
because
has
the demand is there. So that's what I would say.
Okay.
So for you guys in rentals, man, I'm jealous. It's coming.
I would say so. Well, I mean, you can probably see it too, moving from.
Yeah, I just
Austin.
moved here from Austin and same story as Florida, that, you know, people were looking for 10 grand a month rental this thing, right? Huge market for it.
It's like at 2,500 here, it's like,
Right.
yeah,
It's just strange.
It's very rarely
Yeah.
3 Gs a month.
but it will catch up. It has to,
Well,
like
you
you
know, the
said.
reasoning is I think all the $1 million houses people are buying aren't being bought by people who can afford $1 million houses. They're being bought by people who can afford 2.5% interest rates.
That's true.
Yes.
Sure.
Yes.
Yep.
That's what's going on.
So you've got a tradition of some frugality here with the money.
Mhm.
It's a not show, you know,
It's
it's
much different.
the money shows up in overalls and Velcro shoes.
Yeah. It's
And,
that.
and that's like,
Yeah.
on principle, I wouldn't, I'm not gonna pay that, I'm not paying that much rent, I'm just not doing it. And I've seen that happen, like, a lot of normal people are like, yeah, I'm not paying 400K for house and halls, I don't care what the market is, I'm not doing it. You're never gonna make me do it, you know, I don't believe you.
Until they do.
Sure, but I
Or
mean,
get pushed somewhere
Yes.
else.
Right.
but there's a lot of like natural, because we have lots of real social networks. Besides, you know, like the fake one, so the culture doesn't change as fast. I'm from Florida too. It's very, I go back and forth, and it's very like a different world out there.
But it's changing so fast now because of the people coming in
Yep.
that aren't from here, that are like, yeah, 2,500 for a $250,000 house. Yeah, that makes sense.
Right.
It's a bargain.
Yeah.
So it's changing fast right now.
They're coming from areas where they're used to.
Well, you
paying
watch
big
it happen in
for
Austin, the way I watch it happen in Florida, like that,
Absolutely.
like the last 10, 15
Oh,
years
yeah.
in Florida, I mean, it's a different place.
Yep.
100%, yeah.
So it's quick.
I appreciate, you made a really point, just like comment a minute ago, just how the money shows up differently. It's just not flashy things like that. 'Cause Will and I had an adventure today out in Harriman that talking with this guy, probably never totally realized like kind of where his background comes from, right? Brother owns Smoky Mountain Knife Works and the whole kind of thing. You're like, oh, okay, he's got, you know, a couple acres on an island off of Honduras, and just like, this is some wildness. This dude that's rolling around in some, what car was it? Like a
Leave.
yeah, the
Leaf.
Nissan Leaf, a little electric
Off-roading.
car with the back seat ripped out of it. I'm like, Will's in the front seat, I'm in the back, sitting on like an outdoor patio chair, like cushion, holding on for dear life, getting these crazy back turns, checking out. But like some of the property this dude's like sitting on was spectacular. That lot out there was probably one of the best lots I've ever seen on Watts Bar. Like,
Wow.
it was pretty insane. So it is just kind of funny how that just shows up. You never totally realize like who you're talking
You should check out his luxury car out there. He's got like black duct tape on the license plate, just hanging on to his life.
That's awesome. Well, cool, very cool, everybody. So I mean, with that said, right, don't forget, check us out, meetup.com, Facebook, go to gridknoxville.com just to make sure, if you haven't already kind of signed up for it, that's definitely the spot, just to have all the info, upcoming meetings, things like that. RSVP for that, make sure Scott kind of find some deals, right? Connect here, people in the room, we'll make sure that, you know, this recording gets sent out. So if you know of anybody who you think needs to check this out, you know, we would certainly encourage you to include them, send them that link, just kind of get everybody involved, right? Because the power is really in this, just in these connections and this information sharing, and you know, you never know where the next deal kind of turns up, the next opportunity. So thank you, everybody, really for coming into this.
Thank you.
Very good. Interesting
And I'll
night.
leave you with the same thing, like, so what are we doing? We're doing what the future is gonna be your social capital, right? So we build a network, provide value, get back value. We can all do that. It's not just every realtors. It could be, you know, if you guys, someone's asking you questions, come on, bring them, just pouring into those people. We all know this, that's especially people at the beginning of their career, those lifelong relationships where you're gonna be that old man in the back of the room, funding some young buck. Yeah, so but bring people, invite people. You don't have to go Trump laughing necessarily. You can just, I do it all the time. I tell people to promote my stuff. Cool, so we're gonna do some networking?
We'll
We'll
shut
start
down the
off
live
this.
stream here and
Yeah.
just kind of,